Here we have the current stock market update for NVIDIA Corporation, stock ticker NVDA. Before we begin, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts below in the comments section so that other traders will be able to find this information more easily on the platform. So here we have the 1 hour price chart. We're going to look at a bit of a shorter term time frame here because we are starting to see some selling pressure with NVIDIA to start the week. Anybody that saw the prior video on NVIDIA would be aware of the fact that we were calling out some potential bearish price patterns that were starting to form here. I have some opinions on those price patterns. I wouldn't expect them to unfold in the textbook fashion because if we were to see something like that, we would actually see some fairly extreme lows. So in this video, I will be going over what exactly has occurred here and explaining why I think that this would be different from the norm as far as conventional price patterns are concerned. So as we can see here, this is the 1 hour price chart. Each candle on this time frame represents a 1 hour trading period. And we can see that this near term high still comes in right around 120.79. In the prior video, what we pointed to here was the potential development of a head and shoulders pattern, which is now starting to look more clearly formed. Let's say that. So here we can see that the left shoulder came in at 120.16. The head of the pattern would come in at 131.26, and now we have a right shoulder that has developed at 120.79. So this is significant because these are very ominous patterns, and this does suggest that share prices could actually trade much lower. I don't exactly think that will be the case here because if we get into what the actual projection for this type of structure would be, I think you'll probably agree that that type of price movement would be a bit excessive, but we will go over that in this video. So these near-term lows, we are starting to see some bearish selling pressure to start the week, and the candles themselves are showing price lows that come in below 115. So we're trading with a near-term low coming in at 114.35. So that would be this price low here. As we can see, the bottom of the exponential moving average cluster has caught prices and provided some support here. So essentially this orange line here represents the bottom of the exponential moving average cluster. That would be the 50-hour exponential moving average. So we can see here that share prices did manage to bounce off of this area. And this is positive because this means that share prices didn't fall below that exponential moving average cluster. If that had occurred, we would then start to expect momentum readings to accelerate to the downside, and that would be a bearish event. In addition to that, we do have recently an indicator reading on the relative strength index for this time frame that has rolled out of overbought territory. So we are starting to trade back below the RSI's own exponential moving average. That would be this yellow line here. Purple line is the RSI itself. Yellow line is its EMA, exponential moving average. So share prices did roll over out of overbought territory and then trade below that EMA, that exponential moving average. So these are some bearish signals that we're starting to develop. And then when you pair that with the fact that we could be seeing the development of a head and shoulders pattern here, and it is actually turning out to be a pattern like that. It's fairly clearly defined at this point. So when you pair all of these things together, this is sort of a textbook reading here for a bearish outcome. So not totally surprising here to see that we are seeing share prices move below 115. It is a fairly significant price movement here, but we have to note that the stock price itself was caught by the bottom of this moving average cluster, and we have already started to recover most of those gains. So we're currently looking at a green candle. Most recently, there was a bit of a share price gap to the downside, as we can see here, but I don't expect this to be a major factor here because it is relatively small. So just getting into the reasoning here behind how these patterns work. This is a fairly large pattern, to be perfectly honest, and the neckline for the pattern would have to come in right around, just above the $100 mark. You'd really be looking at a neckline that would be something around here. And when you start to deal with these types of patterns, the actual price projection is fairly extreme in some cases. What you would be looking at, as far as the textbook definitions are concerned, what you would be looking at for a price projection would be the distance between the head of the pattern and the neckline of the pattern. So we would need to see the neckline break here right around just above $100. and the head of the pattern comes in above 131. So essentially what this would mean here is that you'd be looking at a share price movement of roughly $30 more to the downside. So that essentially would give us a price projection right around $70 per share, which I think, is fairly extreme. I don't think anybody really expects an outcome like that to occur. So for that reason, mainly, I would sort of deviate from the textbook definitions a bit here. They don't always play out exactly as they're supposed to play out. But I do still think that this price pattern here has been useful because it did sort of signal this near-term decline here. It is a bearish pattern, and there is perfectly sound reasoning and logic that underlies these patterns. I mean, essentially, what you've got here is a price high, a following price high that was a bit higher, so that's a bullish event. But then the third price high in succession fails to match that prior high. So you really do have a reversal turning point here in these patterns that is quite bearish, and it does suggest that prices are ready to head lower. We did see that unfold here. It was sort of a smaller movement, and this doesn't necessarily mean that we're done with this price movement either. But mostly what I am saying here is that I really don't expect the conventional wisdom for this type of price pattern to play out, because that would put us right around $70 per share, which would be a very extreme movement. There are some, fundamental catalysts, possible bearish catalysts that are, developing for this stock. We're still going to be, hearing about this DOJ probe that was. Made public by the Department of Justice, antitrust probe. Is that something that could affect the stock longer term? Sure. Is NVIDIA a bit of a monopoly? I suppose you could make that argument. There really aren't many companies that are capable of producing these types of products. So these are still arguments that are sort of out in the ether and have the potential to continue influencing share prices in the negative direction. However, I wouldn't necessarily, go with the conventional price projections with this situation like this. Instead, what I would do is sort of just look at the structure itself and suggest that, this does point to a bearish outcome here, and we're already starting to see that to start the week. So if we do see a break below this 114 level, roughly 114.50. I do think that you could expect some follow through then to the downside, and we'll have to look at the shorter term timeframes at that point to see if it's likely then that those prior lows at $100 were most likely to be tested next. So here's the current stock market update for NVIDIA Corporation, stock ticker NVDA. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.